Hello guys, welcome to Cash Cost Plus, a space where we break down trading and make it so understandable that even a newbie can participate and become profitable. A quick question guys, have you ever wondered how the professional traders seem to predict market movement with such precision? What if I tell you that it's not magic? Alright, there's a powerful yet simple concept that can transform the way you think and the way you trade. Welcome to the world of candle range theory, a game changer for anyone looking to master the market, right? So in this video, I'm going to break it all down for you. We are going to talk about how candle range theory works, what candle range theory is, and most importantly, towards the ending of this video, I'm going to reveal a golden strategy that can help you become profitable every single day, right? So guys, this is your chance to level up your trading journey. So grab your notebooks and let's dive in real quick. But before we define what candle range is, let's first of all look at the anatomy of candlestick. Now this is a bullish candle, right? And this is a bearish candle. So what makes this a bullish candle and what makes this a bearish candle? A bullish candle can be verified or can be noticed or can be how will I put it? A candle can be said to be bullish if it has a color green. In some charts you see it as white, but in most cases a bullish candle is depicted or represented by the color green, and the bearish candle is depicted or represented by the color red. So what makes a candle green and what makes a candle red? Most people don't know. They just see green and red lines without even knowing what they stand for, what the colors stand for. Well, these lines aren't for decorations. So a green candle or a candle becomes green when the current price of an asset surpasses the previous price of the asset within the time that the previous candle is being formed, right? So if you see a candle turning green, it means that the current price that candlestick is reading is greater or is higher than the previous candle that was formed, right? So also, if a candle becomes red, it means that the current price is lesser, all right, is lesser than the previous candle that has been formed. So let me give you a quick example. So if, for instance, this is a 4-hour candlestick, right? This green candle is a 4-hour candlestick, right? And it's giving us the green color. What this means is that, take for instance, this is a chart of BTC USDT, right? And BTC is trading at $100,000, right? BTC is trading at $100,000, and then the new candle that is forming is showing green. So this typically means that BTC's price has appreciated from 100,000 to maybe 101 or 100.5, or 102,000. It has increased. That is why the candlestick is showing green. But if BTC is 100,000, right, and then the candle that is forming after when BTC gets to 100,000 is color red, the next candle that is forming on the chart is color red, then that means BTC has decreased from 100,000 to maybe 99,005 or 98,000 or 99,008. The price has decreased below the former candle that just finished forming. All right, so that is how you can be able to tell the colors of candlestick. So now let's get to candlestick anatomy. What consists, or what are the components of candlesticks? So a candlestick typically has an upper wick, okay, a close, a body, and a lower wick, and then an open, right? A candlestick has an upper wick, a close, candle body, right? Then a lower wick, which is right here, and then the close. So I'm going to explain each and every one of these one after the other, starting with the open of the candlestick. So guys, this is the open of the candlestick. So in the bullish scenario, the open of the candlestick is always at the bottom, right? Because price is tending to go up. That's why the candlestick's open must be at the bottom, because the price wants to go up. So if the candlestick opens, what normally happens is that it normally goes down and form a wick. Normally it forms this wick. So this wick means that it's just telling you that there was a point in time where this candle, this entire candle, right? When price reach as low as this point right here, but that doesn't mean that the price is still at that point. It's like a footprint telling you that the price once went to this level at this time that this candlestick, this particular candlestick is being formed, but then the price went up again as high as this level. All right, so the reason why the body stopped at this place, not where the wick is because this is where the body opened, right? So the body must start from this place. All right, the body must start from this place. Okay, and then when price goes up to this point, when price goes up to this point, sorry about that, when price goes up to this point, up to the edge of this wick, and then comes back down, all right, it's telling you that the price once went to this wick over here as high as this wick, but then sellers pushed it down, and then the price of the asset closed right here. All right, so I hope you know what a wick is, what the close is, what the open is, and what the body is, the body of the candlestick. So it's nothing but activities, buying and selling, that's what's going on in the market at the time that the candle is being generated or formed, right? So candlesticks are like storytellers. They are the 1-day candles won't tell you the entire story. They'll just tell you it was bullish or the price went up. Before, in order to zoom out to know what actually happened to the market, how did the price go up, then you have to go to a lower time frame, like the 15 minutes, 30 minutes, or 5 minutes. That's when you're going to see when the price went up, how it went up, what sellers did, how sellers did it, what buyers did, how they did it. That's where you're going to see a lot of candlestick on the activity that actually went on in the market. All right, so the lower time frames give us broader explanation, more elaborative stories on what happened in the market. So same applies to the bearish candle right here. So the bearish candle also has a lower wick, an upper wick, an open right here, and a close right here, right? So a lower wick, upper wick, open, close, body. If you get to notice something, you're going to see that the open of a bearish candle is at the top of the candle, while the open of a bullish candle is at the bottom of the candle. So this means that if a candle wants to become red, it normally opens at the top. That is the close. All right, that is the close of the green candle, right? So the close of the green candle automatically becomes the open of the next candle that wants to go red, because the price will tend to go down, and when the price goes down, then the value of this asset we are talking about is going to become lesser while this candle is being formed. So the value of this asset was high before, but when it got to this place, it went down, making this red candle become red as it is, right? So this is just how candlesticks work. So now let's look at the next topic, which is the power of 3. What is actually happening on a lower time frame in the market compared to what happened in the higher time frame in the market. So guys, like we discussed in the beginning of this video, we are going to talk about what a candlestick range is. So a candlestick range refers to the price movement of an asset over a specific period of time. A candlestick range refers to the price movement of an asset over a specific period of time. So let's take, for instance, this is a 1-day candle. Sorry, this is a 4-hour candle. Let's use 4 hours so that our scalpers can get to trade more than once using this strategy that I'm about to reveal to you. So let's take, for instance, this is a 4 hours candle, right? So this candle, or this candle right here, means that it is giving us a detail of what is actually happening, or what actually happened within 4 hours in the market, right? So it's told us that the price of this asset within the last 4 hours was bullish. That is why the candlestick is green in color. But what actually happened? How did it become bullish? That is where the power of 3 comes in: accumulation, manipulation, and distribution. Accumulation, manipulation, and distribution. So like I told you, let's say this candle, all right, this candlestick is a 4-hour candlestick. All right, so now if we want to know what actually happened in the market, the next thing we need to do is to move down to the 5 minutes candlestick, or the 5 minutes time frame. Sorry, so when we get to the 5 minute time frame, we're going to see something like this when the market opens. All right, so this is the open of the market right here, right? So when the market opens, you're going to see something like this. That is the accumulation. Okay, and then you're going to see the market going down in this manner. That is the manipulation. And then after a while, the market will actually start distributing to the upside until it gets to this level of the candlestick high. All right, and then it will come down a bit and then close this way. All right, so this is how you are going to actually see it on the 15 minutes time frame. Now this AMD is what we are going to use, or is the strategy we are going to use on the smaller time frame to actually see, or to actually predict what is going to happen on the bigger time frame. Okay, so I hope you understand the relationship between the 4 hours time frame and the 15 minutes or 5 minutes time frame, on how they break down the market. So we all know that the market accumulates, manipulates, and then distribute. So take for instance, on a 4 hours candlestick, a candle closed, all right, a candle closed in a bullish format, or in a bullish form, right? The candle closed at a as a green candle. So if the candle closed as a green candle, how can you be able to tell if the next candle is going to be green or not? Okay, or how can you be able to be profitable using the next candle? We all know that the candle must accumulate, then it must manipulate, and then distribute. Okay, so let's get to a real candlestick to see how this actually works. I'm going to teach you this golden strategy right now. I don't want this video to get so long. So guys, we are on Bybit, right? We are on Bybit. Excuse me. This is a 4 hours time frame, as you can see, on Solana USDT. All right, this is a 4 hours time frame on Solana USDT. So now, how can we be able to actually identify if a market is going to be bullish, or if the next candlestick is going to be bullish, right? So the first thing you need to do, is to identify the overall trend of the market. So take for instance, if we want to follow this trend right here, all right, we want to follow this trend, and assuming that from this place the candle has not yet formed, or all these candlesticks right here have not yet formed, right? All these candlesticks right here have not yet formed. So the only candles we are seeing are these ones right here, these two greens, and then this downtrend that just occurred right here. All right, so just put it at the back of your mind that these candlesticks right here have not been formed. So the moment you see a reversal, right, the moment you see a reversal, then you know that maybe the market wants to go up. All you have to do is to wait for a confirmation, right, which is the next green candle. And then after waiting for this confirmation, the next thing you will want to do is to actually zoom in and then look at the wick of this candle right here, the wick of the first green candle. Make sure that the wick is touching the body of the next green candle. Pay attention. Make sure that the wick, this candle wick right here, this green candle wick right here, make sure that the wick is touching the body of this next green candle that just formed. This is a sign of a continuation. All right, so after that, all you have to do is to wait. All right, wait for this candle, this green candle, to finish forming, this one over here. All right, wait for the green candle to finish forming. But now, how can you be able to tell if the next candle, right, which is this one right here, is going to be bullish or bearish? How can you be able to tell that? After confirming that the wick has touched the body of this candle, this is what I'm talking about. After confirming that this candle wick over here has touched the body of this one over here, right? So the next thing you need to do is to draw a mark, a rectangle, or an indication starting from this candle that has just finished forming, all right, to see the range that the next candle is going to go. Let me show you what I mean. All right, so I'm going to click on this place All right, since we don't have much tools, I'm going to click on this place right here, this pencil icon. Right, so when you click on this pencil icon, it's going to display for you some indicators that you can be able to use. So we'll just slide this way to the left and then click on rectangle right here. Right, so we're going to click on rectangle, and when we click on rectangle, all we have to do is to bring this rectangle from the candle close. Since we all know that this is the candle close, right? Let me indicate it for you. We all know that this is the candle close, right? So sorry, this is the candle close, and this is the candle's low, the lowest point that this candle, this green candle we're talking about, went, right? So what we're going to do now is to draw this line. All right, just put it from the candle close, since it's a bullish candle, so that means it's going to close at the top, right? It's going to close at the top. So this is the candle close. We're just going to place it and then draw or drag this rectangle down to the lowest point that this candle went. All right, so we'll drag it this way, we'll just leave it this way, and then the next thing we need to do is to go to the 15 minutes or 5 minutes time frame, okay, for our entry. So we are using 2 time frames on this. Now let's go to the 5 minutes time frame to actually check our entry. So all you have to do is to click on more if you're looking for the 5 minutes time frame. All right, just click on more right here. By the way, this is Bybit. So when you click on more, you now choose 5 minutes, right? You choose 5 minutes. So when you click on 5 minutes, we are now going to go to where our rectangle was drawn. All right, so I'll just do something like this. Like I told you, assume that all these candles have not been formed yet. So I just want to see a confirmation. All right, so this was where the candle ended. This was where the previous candle ended, just like we marked, right? So when the candle ends, what normally happens, if you haven't forgot, I told you that there's going to be an accumulation, then a manipulation, and then a distribution. Just what happened right here. All right, so when the new candle is beginning, or when the new candle begins to form, all you have to do is to be patient. Do you know why you have to be patient when the candle is getting red? It's because the overall time frame, the overall trend is an uptrend. Remember, that was the first thing we looked out for, right? The first trend was an uptrend. The first thing we looked for was an uptrend. So the market was in an uptrend direction because the 2 candles that formed after the dip were green candles, so it's indicating a reversal, right? So that is a beginning of an uptrend. All right, now the second thing is to mark the close of the previous candle that just finished forming and the lowest point that it reached, which was how it this is how it's going to look on the 5 minutes time frame. So the next thing you need to do when you have marked this is to look for any bullish confirmation, guys. Look for any bullish confirmation in order to back up your analysis, your entry. So in this case, if we are to zoom out, you're going to see that there is a bullish engulfing candlestick that formed just right here. All right, so this is the bullish engulfing candlestick. So a bullish engulfing candlestick occurs when a red candle is formed previously, and then a green candle will come and totally engulf the body and the wick of the red candle that has previously formed. All right, so you can see other candlestick confirmation. You might see a hammer. All right, a hammer is drawn something like this. You're going to see a square and then a long wick like this, right? It's normally a green candle, but even if you see a red candle, it's also classified, or it's also categorized as a hammer. This means that sellers pushed the price down, but then buyers came in and pushed it back up. This is an indication that the market will continue to go up. So if you didn't see a bullish engulfing, you can use a hammer, you can use a doji. All right, they are all indications that the candlestick wants to actually, or the chart wants to actually go up, all right, or the next candle wants to actually go up. So the moment you see a candlestick pattern or a chart pattern, all right, like the inverse head and shoulder, we've talked about it in our previous videos, the cup and handle pattern, the falling wedge pattern, it depends. So my favorite is the bullish engulfing and the hammer. So the moment I see this bullish engulfing, I'm just going to place my entry just right here. All right, when I place my entry, I'm going to wait for the market to do its thing, which it actually did, and the market actually went up, as you can see. Right, the market actually went up. This isn't magic, this is just candle range theory in combination with daily bias, right? So you can be able to do this multiple times. And one more thing I want to actually show you or tell you is that if you miss the market, all right, don't chase it. I keep telling people that trading is like waiting for a taxi. Just because you missed the first taxi doesn't mean you have to start exhausting your energy running after the taxi, looking for how you can be able to, stop the taxi and enter. No, all you have to do is patiently wait. That's not the only taxi in the city, all right? So patiently wait. Another taxi is going to come and you're going to enter into the taxi and go to where you want to go. So in case you miss that opportunity, just keep waiting for another opportunity, all right? So as long as the candlestick, or as long as the price of the asset did not go outside this box, all right, as long as the price of the asset, which is the candlestick, did not touch outside this box, you can continue to wait for another candlestick to form, all right? So another indication that I just found, or that I just saw, is the hammer. Take a look at the hammer right here, right? So this is a hammer candlestick pattern. When you see this is an indication that the market wants to continue to go up, and that is what it actually did. So if you place a trade and then predicted that the market is going to go up, it will actually go up to this point, right? So the moment the market goes up and remove itself from this box that we drew on the 4 hours, which is reflecting on the 5 minutes, then you can just option out of the market and then call it a day, or wait for the next trade or the next candle that's going to form, and then follow the same procedure. All right. And there's another way, if you are finding it difficult to actually determine if the candlestick is going to be, or if the trend is going to be an uptrend or not. There's another way you can be able to find out. So the next confirmation that will determine if the market wants to actually go up is by using a technical analysis indicator called the moving average, which is right here, all right, MA. So before you toggle on the moving average, all you have to do is to go to your indicator settings. Let me show you. All right, so all you have to do is click on this gear icon right here. So when you click on it, you're going to see this interface appearing, and then all you have to do is click on indicators, right? So when you click on indicator, it's going to bring you to this interface. Then click on moving average, all right? Click on moving average right here. So when you click on moving average, it's going to bring you to this place. You're going to see ME1, ME2, ME3. Just choose one of the moving average, and whatever it is, just change that moving average to 20, just like this, right? So when you change your first moving average, which is ME1, to 20, then the next thing you have to do is click on confirm to save your settings, and then go back, just like this, right? So you just need to come over here, all right? You just need to come over here and toggle on your MA. So when you toggle on the MA, and at the same time you see a bullish confirmation indication, which is a bullish engulfing, just like this, all right? A bullish engulfing indicating that the market wants to go up. All you have to do is to confirm that this moving average line right here, this yellow line you are seeing, is above the current indicator that you have seen. Once this line is above any indicator, be it the bullish or the hammer, then you know that the price wants to go up. All right, so that is your entry. That's where you're going to enter. Do not be afraid to take entries, guys. Whenever you see it, just take the entry. So that's how you're gonna, actually use this to actually enter the market and make profits off of it. So as you can see, this was our second indication, right? This was our second entry. That is in case we missed the first entry. This was the hammer candlestick that I showed you. As you can see, you're gonna see that the line is also above the hammer candlestick, indicating that the movement has not stopped yet. There's going to be another movement to the upside, and voila, there is. All right, there is another movement. It's as simple as that, guys. So I hope this video is going to help you, and I will need you to do well to click the like button, subscribe, comment if there's any mistake we've done, okay, to correct us, and click on the subscribe button, because we are going to be dropping more strategies that are guaranteed to win. So I'm going to be dropping a full course on how you can be able to combine daily bias or 4 hours bias in conjunction with the candle range theory to help promote your trading journey and take you to the next level and increase your portfolio. I hope this video helps, and I hope you have a nice day.
You can have everything you've ever desired, all of it, if you actually want it. But if you don't actually want it, it's not going to give it to you, because you cannot fool the universe and you cannot fool God.
The market is designed to take money from the impatient and give it to the disciplined. Most traders lose not because they're unlucky, but because they refuse to wait.